Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 9, 2022. Let's talk about a great biotech company. It's a Cytokinetics, ticker symbol CYTK. As you can see here, they're empowering the muscle, empowering the lives. So as you all know, heart disease is a leading cause of death throughout the world. And this company wants to reduce the death because of heart failure. You can see here image. There are various patients with the heart failure, and this company is really helping them out. So with that, let's jump in and get started. So we'll talk about company overview, major ETFs holding Cytokinetics, competitive landscape, review few charts, do a deep dive, look at the financial summary and stock performance, and finally do a final verdict here. So as you can see here, we got Cytokinetics. It's a leading company. They have a vision for 2025, and they really want to help with the muscle failure and the heart disease. As you can see here, they have various drugs in the approval stage here. They're working through their pipeline. And they also want to build their capabilities and make sure they are more scalable. And they want to generate a revenue like any company will like to do. And they want to double their development pipeline, expand the discovery platform to really help with the muscle weakness and also deliver strong performance. So with that, let's jump in. So as you look through here, we got Cytokinetics here. There is a huge heart failure cost here, 123 billion annually, representing 33% of total Medicare budget. So as you can see here, heart failure is a major cause of death. So we got to address this effectively. So this is where Cytokinetics will come in. They have this drugs in the pipeline to address this issue here. As you can see here, the non-heart failure 272 here, and the heart failure is 6x here, 1664. I think this is where this company is really honing in their skills and coming out with the drugs. All right, so as you can look through here, they have a rich pipeline. They got cardiac muscle here. There are various research going on. As you can see here, they got phase 3 with the Omicam 2 here. This is for heart failures, as you can see here. And they got phase 2 going on with the Aficam 10 here. And they got phase 1 and phase 2, actually phase 1 in other two. And they also have various other drugs going on here. They got phase 3 coming up and also preclinical and other research projects going on. As you can see here, rich pipeline, and they got various things going on here. And this company is known to bring out some of these drugs to market and also get some faster approval from FDA. All right, so with that, let's jump in here. Look, they got a robust pipeline. They already did some positive trials in 2021, as you can see here. They also got some, fast track approvals. And as you go through, they got 3 potential approvals by 2025. Looks like 2025 is a big milestone for this company here. They got various programs here, preclinical and development programs here, and they're shooting for 10 development programs by 2025. And they're addressing heart failures head on here. As you can see here, they got trial results for this indication here. And they got 242 employees here, and they got a lot of cash, 669 million by Q3 of 2021. As you can see here, this company needs a lot of money. They are raising the cash as usual to get the research going on here. Even though revenue is less, there is a lot of promise. I think pipeline is very rich here, and 2025 could be a very pivotal year for this company. In the meantime, it's bringing out some drugs to the market with a fast approval by FDA. All right, so let's look through the background of this company a little more here. Cytokinetics, late stage biopharma company, focuses on commercializing muscle activators, as you can see here. And they look at, they have a novel cardiac myosin activator here. And they're also working with the patients with heart failure and various other failures, as you can see here. Stock price is around $35, and they had a huge drop in their price, mainly because the Wall Street did not think the deal between Royalty Pharma and Cytokinetics may not be very favorable to Cytokinetics. That's how probably the market perceived. That's why stock came tumbling down, as you can see here on last Friday. And market cap is around 2.96 billion, as you can see here. And they got a strong consensus forecast from analysts. We got 9 analysts here basically saying a strong buy rating here. And look here, stock chart is doing pretty okay, as you can see here. And look, stock had a nice run, very good run in 2020 all the way to 2021. And after this Royalty Pharma agreement here, stock came tumbling down, as you can see here. I still feel this agreement between Royalty Pharma and Cytokinetics is a good one for both the companies. I think it may be more favorable to Royalty Pharma. That's how probably Wall Street perceived it. As you can see here, there is a agreement here, funding agreement, in which Cytokinetics will get upfront money here. They get a nice $450 million, which is a good one here. I think, Royalty Pharma is known to give money for these type of candidates here. And Cytokinetics, let's be frank here, they do need the money. They're burning through the cash to come out with these drugs to the market. I think it's a good partnership here. I think, Royalty Pharma is a great partner, and they can really work with Cytokinetics to make it happen. And Cytokinetics is also announcing some collaboration here with the licensing of this drug here. I think that's a good one here. So with that, let's jump in and see what's going on here, and if you can buy this Cytokinetics on this huge big drop here and go from there. From a price target perspective, as you can see here, we got multiple price targets going on here. High target is $69, and we got one more medium term target, $55, and it's both of these are much higher than the current stock price. That's a good sign here. So we can expect at least a nice bounce in the stock price according to these estimations here. So with that, let's jump in here and go from there. So from a leadership perspective, we got Robert Blum is the president and CEO of the company here. He has got 74% approval rating from the employees. We got total 20 ratings, as you can see here. And the CEO is has been on the board on the company since 2007, so he's been there for a while here. He knows what's going on here, and he was head of research and development, corporate development, legal, and various operations roles here. And before taking on this role here, he was at Core Therapeutics. That's again a good company. And also he was with the Synax Corporation before that, and also Marion Laboratories. Looks like he's got the relevant background here. He can lead this company nicely. He's known to make some deals and take the company forward. So with that, let's jump in. So there are a lot of ETFs holding this CYTK, Cytokinetics, as you can see here. We got a huge amount with the Invesco here, around $13.13 billion. And we got $58 billion in the XBI, S&P 500 biotech ETF. That's a huge amount here. Then we got your small cap ETF here. They also hold nice amount, as you can see here. And we got highest here with IJR, iShares small cap ETF here, holding 251 million. So as you can see here, this company is very well supported by these big ETFs and fund companies. I think we don't need to worry about support level from these big institutions here. So let's now look at competitive landscape. There are a lot of players in this market. Let's see what's going on here from a competitive landscape perspective. So as you can see here, we got CYTK, Cytokinetics, and its peers. Look, we got at the top here a small company, Edgewise, just $17 stock price here. And this company is very recent here. As you can see here, they are just probably a month old or so. So we don't have too much background here. But by looking at institutional ownership here, institutions own 104%. That tells you this company also can do well. Next, we got Cytokinetics, the company that we are going to be talking about. Look, by looking at this, you can see here there is no revenue growth because this company is a really late stage biopharmaceutical company, and they got some sales which is very less here. As you can see, $22 million in sales, and net margin is negative, gross margin is zero. But there is a lot of promise for the future. Look, institutions are buying this company 112%. And as you can scan through here, high price to sales ratio here. This tells you from a valuation perspective, it's a sky high. Given sales are low, that's why price to sales ratio is super high here. And after this huge big drop here, it's down 23% in 5 days here. On the positive side, look at the performance here. It's done great in 1 year and 5 years, and a nice volume here. So this is where this company is doing well from a research and development perspective to bring the drugs into market, working through multiple pipelines. But when it comes to actual revenue, that's not there too much here. They're burning through their cash to really go through this research and development to bring the drugs to the market at this time. And then we got a few more here. We got FULC, as you can see here, $15 stock. This also, as you can see here, it's got about 27 as its price to sales ratio. As you can see here, little expensive, but this company, as you can see here, it has got some sales growth here. I think it's that's a positive thing about this company here. And then you got big brother here, REGN. It's a big company, as you can see here. Its market cap is around 64 billion. Nice sales growth, and also price to sales ratio is 5. That tells you it's even up here, it's very cheap from a valuation perspective. And then you got few more here. AMGN used to be the darling in the Wall Street a couple of years ago, but now AMGN is not doing great. As you can see here, 1 year just 1%, as you can see here. And this company, Cytokinetics, had an agreement with AMGN for a long time. They basically abandoned their partnership after 14 years of partnership. And then you got a few more, as you can scan through here. All these companies down here have got a negative 1 year performance, as you can see here. But I like many of these companies. As an example, BBIO is a good company. It's stuck right now in the negative performance right now. But I think overall that also should be okay here. And you got ALLO here, which is one of the competitor. ALLO, as you can see here, this is also negative performance as of now here. And this company, as you can see here, does not have sales growth. Again, it's bringing the drugs to market, working through clinical trials. That's why you don't see any sales growth yet. And then you got a few more here. Nectar Therapeutics is also one of my favorite here. As you can see, a $12 stock. It's also has been struggling a little bit, as you can see here. And then you got a few others. You can read through this, but let's focus more on CYTK and see if it's worth buying here. All right. Now we look at performance over the years. We also should look at how the stocks have been doing over the years. And we got here our company CYTK. As you look through CYTK here, they had struggled back in 2018 and 2017. But from that point onward, they've been doing nicely, as you can see here. Despite of not having too much sales, they've been doing very well from a performance perspective. But this year so far, they're down 2.8% in 1 month. And high price to sales ratio or high valuation. They're okay from a finance perspective. They got a grade C here. They got some funding there. But from a growth and profit perspective, they are a rate F from Morningstar. And as you can see, REGN is a better run company. It's a big company that's been doing great. Even in 2018, it's just down 2%. I think this is always a good company. But right now, as you can see here, they're struggling in last 1 month time frame, down 3.4%. But this is a great company. REGN is a great company for your long-term portfolio. And then you got a few more, as you can scan through here. Keep watching the performance. Some of these companies like Chris as examples, little company, $3.49. They've been putting up nice growth, as you can see, a nice performance in 2020 and 2019, but they're struggling in 2021, and they're also struggling in 2022. In 1 month, they're down 25% here. So with that, let's jump in and look at some more details here. All right, let's look at chart here. From a chart perspective, as you can see here, Cytokinetics, as you can see, stock has been dropping, huge big drop, as you can see here, just too big here. But look what's going on. When the stock is dropping, on the balance volume is pretty steady here. That tells you folks are buying this company on the drop here. That's a good news here. Normally, when the stock drops like this, you'll see a steep drop in on the balance volume, but that's not happening in this company here. So with that, let's look at Fulcrum here, FULC. This stock had a big drop, as you can see here, but now stock is trying to go higher on the balance volume. Is pretty stable here. That tells you even this company here, FULC, you could still buy into this huge big dip here and take it from there. And then you got ALLO here. As you can see here, ALLO stock has been dropping. But look what's going on. On the balance volume is pretty steady here. That tells you the big money managers are buying this company here. There is more buying than selling, even though stock has been dropping here. And we got REGN. It's a big company, as you all know here. Look, stock has been trading sideways for a while here. It's trying to go higher on the balance volume. It's also trying to go higher here. I think it's a good one to buy. It's a good one for your long-term portfolio. You could buy and hold REGN. It's a great company. All right, so let's look at a few more here. So we got NKTR. Look, NKTR, as you can see here, it's in a tight trading range for last few days. But as you can scan through here, on the balance volume is going higher. That's a very good sign. I would be a buyer in the Nectar also here. It's also a good company. And look here, IV percentile is 100. That tells you you could sell some put options and make some money, but only caveat is stock price is so low here, you will not get too much premium if you sell put option. Then we got BBIO here. BBIO, as you can see here, stock has been dropping off big time. Now it's trying to stabilize and go higher on the balance volume. Wants to go higher. That tells you there are more buyers than sellers. You could also buy the BBIO into this big, huge drop here and go from there. And then you got AMGN. AMGN used to be darling in the Wall Street, but look what's going on. Stock had dropped a lot. Now it's trying to go higher. And look, on the balance volume is also going higher. That tells you after this huge big drop here, AMGN has got some legs here. You could buy some AMGN and sock it away. And then you got Chris here, little company. As you can see here, just $3 stock price. Stock has been faltering and dropping big time. On the balance volume is also dropping. Unless you're a contrarian, you should not get into this one up here, given on the balance volume is also dropping. But if you got a long-term horizon, you could buy some and hold on. All right, now let's look at Cytokinetics and do a quick deep dive. So from a snapshot perspective, as you can see here, it's a pretty small company with the market cap of around $2.9 billion, around $3 billion. And as you can see here, it has got an analyst buy rating. That's good to know here. And the company has been formed a long time ago. IPO date is back in 2004, as you can see here. And target price is 55. So current price is just $35. Look, target price is 55. That's a good $20 bump here. This stock can go higher. And beta is 1.23. That tells you it's a volatile stock. It goes above and beyond S&P 500, either on the higher side or lower side. That's why beta is more 1.23. And nice big volume after the drop. Its relative volume is 3.9. That tells you it's trading 3.9 times normal 3-month volume. Now, if you look at the sales here, this is where it gets a little interesting. They have a just sales of 22 million, as you can see here. Quarter-over-quarter sales growth is negative. That's why companies are struggling a little bit on the sales side of the house. Year-over-year sales growth is also negative. 5-year sales growth is also negative. So company is doing a lot of good research and development work, bringing out clinical trial candidates, but sales is not there yet. That's why they need a lot of money. They're not generating the revenue. That's why partnerships like Royalty Pharma is going to help this company. And from a price to sales perspective, this is very expensive. 136, hugely expensive. Wall Street does not like these type of companies, but biotech companies sometimes get a pass in this Wall Street many times. And from a growth perspective, this company has a nice growth for next year. Looks 6.7% EPS growth, and it's got a sales growth projection of 22%. That's the good news here. That tells you analysts are bullish about prospects of this company going forward. From a financial perspective, look, they got a little more higher debt here, 1.10. They do have a lot of cash, 478k, million here. They're not going to run out of cash. Free cash flow is negative. They're not in a super position when it comes to financials. And as you can see, a return on asset and equity both are negative. That tells you they're not making money. And Piotrowski F score is 1. That is telling you their financials are not improving, mainly because they're not generating revenue yet. So I want this ratio to be at least, say 6 or 7 or 8 or 9. But this is stuck in 1. That tells you financials are not improving because they're still, early stage company or a late stage biopharma company. And as you can scan through here, from a return perspective or a performance perspective, stock is not great from a 1 year and 1 day, 3 month, even 5 day, 10-day perspective. But if you have a long-term horizon, look, 1 year great performance here, 64%. 2 years is great. 5 and 10 years are great, as you can see here. Company is not making money, but putting up nice performance, as you can see here. From an RSI perspective, from a technical perspective, it's a great buy here. Right now, stock is sold off heavily here. And IV percentile is a little low here, just 16. That tells you you can even buy long-term call option for this company. You're not paying too much money because IV percentile is very low here. And as you can scan through from a moving average perspective, it's below its 10-day moving average. It's bearish, that way. And look here, institutions are buying this stock nicely, 23% institutional buy here. That's a very good deal here. From a financial perspective, it's low here. Anything below 1.8 from an Altman Z score perspective is not great. This company has not a great rate from a financial perspective, but from a growth and profitably, also it gets a F here. So overall, company is struggling with their bottom line here and the top line. At the same time, they are bringing out some good drugs. That's why they need the partnership with the Royalty Pharma to get some money and get their operations going. All right, so let's now look through their numbers here and see what's going on here. From a numbers perspective, as you can see here, look, from an earnings per share perspective, it's a little bit improved. As you can see here, there is some uptick. It went a little higher, but still negative, as you can see here. And from a sales perspective, at least there is some good positiveness here. It's going higher on a year-over-year basis. And shares outstanding is also going higher, mainly because they need some money. They have to fund their operations. That's why there is some dilution going on, but it's not huge dilutions. I'm okay with this. From a quarterly revenue perspective, this is one of those boom bust stocks. Sometimes stock does very well. Look, $42 million in revenue. That's great. But look what happened afterwards. Afterwards, it's struggling a little bit, less tapered down, and then it's going higher. So that's why this is not a predictable company from a quarterly revenue perspective. Sometimes they do great, sometimes not so great. And one thing I like about this company here, look here, nice R&D, going on here. They're spending a lot of money in the R&D here. That's why they need money, and they're not generating revenue. That's why they need the partnership. I like the companies spending money and investing in their own R&D. This company is doing it. And from a quarterly net income perspective, look, it's trending negative here. That's because they got to spend money on all their R&D, as you can see here. So that's where they need some money here. That's where Royalty Pharma comes in. All right. Now let's look at quarterly performance of this company here. Look, from a market cap perspective, company is growing the market cap nicely. As you can see here, it was a just a $652 million company back in 2019. Now it's already $2.9 billion company. It was a $3 billion company. After this drop, it became $2.9 billion. And from a price perspective, it is $11 per stock while ago, back in 2019. Now it's a $35 stock after this huge big drop. And if you look at the quarterly performance of the stock here, look, it's a up and down type stock here. It went up some quarters nicely. Look, huge performance back in 6/30/2020 here. And again, up and down type stock here. Sometimes it does great, sometimes it does poorly. But I think the trick is to catch this stock when it's down, like right now, and hold it for a while. You'll do well. And on the sales side, on the revenue side, company is struggling, as you can see here. Sometimes it does great, like the quarter right here, and sometimes it struggles. Right now, it's really struggling a little bit, as you can see here. And this company is surprising Wall Street negatively. It's giving negative sales surprise here. That's why Wall Street, does not like it when they see negative surprise. On the earnings per share perspective, it's a negative right now, and they're pretty much in line. There is no surprise, as you can see here. And they do have some cash here. Cash position is improving, as you can see here. And they're also borrowing money. Look, they are borrowing money more and more and more to fund their operations. That's why partnerships like Royalty Pharma will help them. I don't like huge debt here, but I think companies got some hopes here with a lot of their pipelines, maturing. There is some good hope that this company can make it. As you can see, our debt to equity ratio is dropping down from 15.2 to 1.1. That's a good news here. And company does not have free cash flow here, and operating cash flow is also negative, as you can see here. And gross margin is 0. There is no gross margin. Net margin is negative. Spending a lot of money on the R&D, which is a good one. And ROE and ROA both are negative. And there's a high price to sales ratio here. So in a nutshell, as you can see here, stock is doing very well from a performance perspective. As you can see here, Wall Street is giving it a pass, even though it's not making money, mainly because Wall Street sees potential in this company because of their drugs and their pipeline. So with that, let's jump in and go into some more details. Now let's look at their performance from a yearly performance perspective. Look, company have done pretty okay, as you can see here. Back in good old days, 2012 time frame, it used to put up some negative performance. But off late, there is some negative in 2018. This is when interest rate hike happened. I think probably with their huge debt load, they might have had some tough time. But off late, company is putting up nice, solid performance, as you can see here. From 2019 onwards, nice performance. And their pipeline is also much richer now. That's why I think it's a good one to buy on the pullback and go from there. And from a monthly performance perspective, as you can see here, they've been dropping off big time in January. Even though January is not yet over, it's already down 22%. This is when we can slowly start buying this company. Given, as you can see here, whenever there's a huge drop here, they will always come back nicely in a month or two and go higher. Look, there is one more here, 29% drop, came back up nicely, 15% drop, came back up nicely. That's why I think it's good to slowly initiate a buy position in CYTK and hold it for a while. It's a good one to have it for long term. And now let's look at the performance here. As you can see here, this is a performance from a 5-year weekly perspective. It's a long-term view. And as you see here, look, there is a huge performance here. Company did very nicely, as you can see here. And there are bumps along the way. Huge big drop, went up again, as you can see here. And huge big drop again here. And you could extrapolate this. I'm sure this will also become something like it will go higher again. And one more drop here, and stock turn around and went higher. So that's why I think, for this company here, this company is known for these type of drops, and it'll pick itself up again and go higher. So I'm not too much worried. If you got a little bit longer term horizon, you could buy some CYTK. It will do well. All right, let's look at a 1 year chart here. As you look through 1 year chart here, company did nicely from July onwards. As you can see here in 2021, they did great here. Stock went up and up and up. Now there's a big drop here. Right now, as you can see here, there is some positiveness here. Companies, trying to make a come back here. As you can see here, even though this candle is not very super strong yet, but I think at least there is some stability, at least in a 1 day chart. As you can look through here from an RSI perspective, right now RSI is kind of down here. That tells you momentum is down at the current moment. That happens after this huge big drop here. And look, IV percentile is very low here, just 16.7. That tells you you could buy some long-term call option here into this big drop, maybe a 1 year, 2 year out. You're not paying too much money at all. And from a DMI perspective, it's one of my favorite indicator. The red line wants to go higher and blue line wants to come down. That tells you right now it's bearish here. So that's why it's a good time to slowly buy some stock into this bearishness, because there is a sale going on for this stock right now. And look, from a check-in money flow perspective, as you can see here, nice uptick here. That tells you even after this huge big drop here, smart money is still flowing into the stock. That's always a good sign here. Check-in money flow is also not too bad here. It's a little bit down, but it's pretty stable here. So with that, I think from a technical perspective, looks like this is a good one to slowly buy and go from there. All right. Now let's look at the option chain here and see what options market is telling us. Look, stock price is $35 right now. And look, all-time high is around $47. And if you look at the option chain here, around $35, we got nice open interest around 69 here. That means folks are buying call options for the current price, and there's some good 69 contracts. And as you look through here at $60, we got nice opening here, 117 contracts, and keep watching here. There is a lot of open interest as you go higher. Look, we got open interest at 40 and 41, 42, and so on and so forth. That tells you in the options market, folks are betting the stock will go higher. If you look at the put option here, open interest is very, very low, not too much here. Even there is some open interest here at a higher price, but compared to call option open interest, put option open interest is relatively low. That tells you stock is bullish here. So with that, let's jump in and look at the open interest here and look at the option statistics. As you look here, we got total 547 contracts traded on the call side of the house and just 83 contracts on the put side of the house. That makes the put call ratio around 0.152. That's very, very bullish, mainly because there are more call options traded than put option. That tells you folks are betting the stock will go higher. Even after this drop, folks are buying call option, mainly because implied volatility IV percentile is very, very low. You're not paying big money to buy call options here. So with that, let's look at a few more details here and see what should you do right now. As you see here, Cytokinetics dropped big time, 21% drop or so in last 1 day. The reason for the drop is mainly because the partnership here. Before you go there, let's look at the history here. Look, Cytokinetics tried to have a partnership with AMGN for a long time. They had a partnership for 14 years, and finally they bailed out of this partnership. At this time, they needed money. AMGN partnership did not work out, so they were looking for a partner to really fund their operations here. That's when Royalty Pharma came in. Royalty Pharma announced, between Royalty Pharma, Cytokinetics, they announced a funding agreement up to $450 million. And Cytokinetics will get upfront $50 million for Chinese rights for the heart failure project. I think that will help Cytokinetics right away with $50 million. And Royalty also purchased 4.5% of royalty rights for FECATM 10 up to 1 billion and 3.5% beyond that. So I think it's a good deal for Royalty Pharma. They get to lend some money, collect some money. That's what they do. They are very good at that. For all the future purchases worldwide, they will collect 4.5% in royalty rights for AFICAM 10 up to 1 billion and 3.5% beyond that. So that's a very good deal for this Royalty Pharma here. And for that risk here, for giving that money, future sales, Cytokinetics will receive up to 1.5 million of that portion of the deal. So that way they can fund their operations, get the drugs to the market, and go through these clinical trials. And Royalty Pharma extends capital to Cytokinetics to support the commercial launch of omecamtiv and mecarbil to further development this FECAM 10. So I think it's it's basically need basis, right? I mean, for Royalty Pharma has some money. They are known to make these type of deals, and Cytokinetics, badly needs money to fund their operations. I think you could argue this could be a better deal for Royalty Pharma, but I think Cytokinetics has to deliver their part of the business deal also here to bring the drug to market. I think it's a good deal, but for some reason Wall Street thought it's a great deal for Royalty Pharma because folks have high expectation for this drug coming out of Cytokinetics here. And as you can see here, this omecamtiv mecarbil here, it's investigation selective small molecule myosin activator, and it was granted fast track designation from FDA here. That's why there is a high hope for this year. The moment Royalty Pharma purchases the royalty for these type of deal, that's why Wall Street is not super happy here. And this drug will help with the heart failure, which is a leading cause of death. And then you got your AFICAM 10 here. It's again an investigational selective molecule myosin inhibitor here. I think it's also a breakthrough designation. That's why there's a high hope for these drugs coming out of Cytokinetics. If I did not strike this deal here, they could have kept these royalties all to themselves. But now they give up, which is understandable. That's why Wall Street did not like this year. And as you look through here, we got consensus for Cytokinetics from the 10 analysts here for the revenue of 72 million in 2022, which is a 232% increase over the past 12 months. That's a great bump in the revenue here for this company. I think there's a high hope for the drugs from this company here. So in a nutshell, I feel stock is overly punished here. I think company doing great here. They needed the money. I think Royalty Pharma is giving them the much needed money, and mainly because the partnership with AMGN they bailed out here. They needed the money badly. That's why they entered into this agreement with Royalty Pharma. But Wall Street somehow thinks it's more beneficial for Royalty. I think it's a partnership. At this time, I think stock is overly punished. I suggest moderate buying right now. And if it falls down further, keep buying. It's a great company. They will do very well. So with that, thank you very much. Happy investing and trading. Please subscribe.